Welcome to the Techno Fundamental Report for February the 8th. William O'Neill has a really good book. I've recommended it many times, How to Make Money in Stocks. You are better off staying on the sidelines in cash until a new bull market really starts. That's what trend following is all about. If the trend is down and you're in a bear market, it's just kind of best to sit on the sidelines. So the first thing I learned about how to get superior performance is not to buy stocks that are near their lows, but to buy stocks that are coming out of a broad base and beginning to make new highs. It just seems that when things seem high, they go higher, and when things seem low, they go lower. My philosophy is that all stocks are bad. There are no good stocks unless they go up in price. If they go down instead, you have to cut your losses fast. Letting losses run is the most serious mistake made by most investors. So when you do get in a bear market, there's going to be probably a change of the guard. So another group of quotes here would be from the book Warren Buffett, The Buffett Way. Really good book. Read the last chapter. It talks about portfolio management. He said, would you rather invest in a company that's earning 15 or 20%? Or would you rather have a 3% bond which can never earn more than 3% while you own it? Just a good question. Charlie Munger, always take the high road. It's far less crowded. No wise pilot, no matter how great his talent and experience, fails to check his checklist. So we kind of keep going here. Bear with me. Now, this was some news that came out last week. Mike Wilson, who was the head of the Global Investment Committee for Morgan Stanley, has had to step down because he's been wrong, and he keeps trying to make these predictions. He keeps saying that the market's going to pull back 20%. Now, he started calling for a recession 2 years ago. So Peter Lynch would say why you should always ignore economic predictions. You really cannot make predictions. They just don't work. Edward Johnson, his family founded Fidelity, and he says here, if there was a simple formula for success and it was easy to follow, everyone would be doing it. The main thing Ed Jones talked about in my memory is that he was a big fan of the 200-day moving average, and he was asked one time if he was on a desert island and could pick one stock indicator, what would it be? And he said the 200-day moving average. So there, as you can see here, the trend is up. Trend is up. This is the S&P. This is the NASDAQ. One thing to look for in investing in individual stocks is you have to realize the market is very efficient. In business school, we learned about the efficient market hypothesis called EMH, which basically says the market has all the information. So when you start thinking about the calculatable nature of your investment, because if it's real calculatable, it's hard to really get an edge on it. So like take, for example, Eli Lilly here. As you can see here, we're going to talk about some charts today, but you can see here breaking out, good volume. They have a new drug, a weight loss drug. And I mean, the thing that would be so difficult to calculate is how many people are going to use a drug? Is a drug going to be used in other circumstances, such as cardiovascular? So in other words, it's somewhat incalculatable. So it really is something that you should seek. It's really what speculation is all about. Now, one thing to realize also when you look at something like Eli Lilly's situation is that, realize now that of the GDP, roughly 70% is consumption. So when you see what I keep talking about the demographics of our country being very positive, that means a lot of consumption. So consumption really is the key to the economy. Okay, aggression index. Let's just kind of see what the market's doing. You can see here aggression index hitting a new high. Remember now, this is a reading that says, we should be aggressive here. Now, I wouldn't be surprised now if this doesn't consolidate for a while, but it is definitely looking positive. Our three economic indicators, you can see here, interest rates have flattened out. Price of oil is still continuing to be in a downtrend below the 200-day. And the financial stocks are actually looking overall pretty good, but it's mainly the big banks. The regionals are having a tough time, and here's a graph of it. The regional banks continue to be in a downtrend. They have starting to see some loan problems, and I think that's what's causing this. Semiconductors continue to look good. This is the SMH, which is the semiconductor ETF, continues to look good, breaking out, consolidating, breaking out again. So things like NVIDIA look very, very powerful. Here's a couple stocks to look at. This is Axon Enterprises. They make the taser. You know, they are into police cameras, the so forth. It's a very good little company. We've owned it before in the past. We don't own it right now, but you can see that back here in November we got that major amount of volume come in. Stock somewhat failed right away, but then actually been in a nice uptrend. You got a good base. Now, one of the things to look for in a base is a tight trading pattern, which is you don't want real wide swings because that really means a lot of uncertainty between the buyers and the sellers. But when you get tight trading like this, it's telling you that the buyers and the sellers have pretty much come together. But as it breaks out, it's saying that the buyers are taking over, which is what you want. Here's American Express. I thought this was interesting. Very strong uptrend, announced earnings, very positive. You got what we call a flag, ascending flag formation. Keep an eye on American Express. These are stocks that are just on my watch list that I'm just sharing with you. CrowdStrike, cybersecurity, you can see here, nice uptrend. Got a nice tight base in here. Just announced, they didn't announce earnings yet, but there was an upgrade and the stock did break out. Here is Novo Nordisk. This is like Eli Lilly. They make the Ozempic version of the weight loss drugs. Again, it's somewhat incalculatable, so that's what makes it so interesting. And you can see the breakout. We're a little bit extended here to the upside, but it continues to look in a very positive pattern. Last but not least is a company called Shopify. This is an old name. They basically provide people with the ability to compete with Amazon is what the bottom line is. It broke out, uptrend, consolidate, hold it in there, and then just broke out yesterday on pretty good volume. So that's it. If you have any questions, please let me know. Thank you very much.